MSMEs often have problems accessing funding through formal credit institutions such as banks. Now, what can be done in this regard?
I think there are three fundamental problems, Manali. One is that the solid case for acceleration of growth is simply not there. In India, we have lots of small and medium-sized enterprises who have been around for 25, 30 years, first generation, second generation, and their sales and revenues are merely 10 crores, 20 crores, 30 crores, right? I think there needs to be a sense of ambition, a justified ambition, well-informed ambition to grow much faster. So fundamentally, that's a big driver. And SMEs, a lot of times, it becomes a lifestyle business for many SME owners. When they have a BMW car, they have a big bungalow, they're earning enough. They don't feel as inspired to grow 10 times and 20 times, which is not the case in developed countries, right? You would have a different sort of ambition level. So that's the first thing. Second is really when it comes to business case for funding, often this lack of ambition and acceleration results in basically preparing a poor business case for any lender or any investor to be deeply interested. See, at the end of the day, what is lender looking at? What is investor looking at? To expand the balance sheet, and secondly, to improve the quality of the balance sheet, right? Now, if they don't get either, then it's a problem. So a lot of times what happens is that they are not able to give the money to these SMEs because there is not enough business case so that the money will be repaid correctly, right? Because their business models are fractured, their business plans are not clear, their ambition to grow is not well supported by the market evidence. So naturally, a lender or an investor is going to be reluctant to invest in or lend money to such a company. Correct. So firstly, that's a quality is a problem. Quality of the business case is a problem. And secondly, we have a dichotomy in India wherein there is a need for $600 billion of deficit, which is needed to fund the SME's growth. But if you look at the supply side, it's not that the money is not there, the money is there. But the takers need to be solid enough and good enough. So I think that needs to be done. The second problem in funding is that often the banks are caught up in their own algorithms in terms of funding cycles and funding assumptions. With COVID and a lot of the other external factors, a lot of these assumptions have changed. Right? So when one is lending money and one is investing money, one needs to relook at those assumptions and pick up a lens, which is a combination of what is required to fund like a startup, right? I mean, the lens that you would look at a startup and the lens that you would look at an SME is very different. So there is a need to redefine some of the assumptions behind which one starts looking at funding an SME. And thirdly, very importantly, which is the point related to the first question that we discussed, is that there has to be the risk assessment at the ecosystem level, at the cluster level, as opposed to only a unit level. Often, the community-based improvement is a very solid reason why the money should be lent to that customer, lent to that industry, lent to that subsegment, which is very different from one-on-one lending or one-on-one investment paradigm that we have had in so many years in the past. So I think some of these factors need to change. And finally, I would say, from the funding perspective, there has to be a very strict discipline in terms of doing a program management office to know whether the outcomes are realized and whether the SMEs and their ecosystem players, the advisors, the mentors, the other players and the partners, for example, are truly giving justice to the money that needs to be invested and are getting sufficient returns out of it. So these are the host of factors that need to be looked at.